of the system. And we are the core of the system not because the dollar is the reserve currency, but also because we have the most liquid, the most predictable financial system. And you don't want this sense of unpredictability. Add to that we are in a political environment. I was on the set when I argued going into July that they should cut by 25 basis points.
Sound good?
And
are we good, Luke?
25, 25, 25, 25, and not be put in this position where whatever they do today, they're going to be attacked in a significant way politically from either side.
Couldn't you argue that it's a bit dramatic to say
right,
that
perfect,
the
thank
decision
you.
between
You
25
can hear
and 50
the stream okay too? It's not
the
too loud?
possibility of the U.S.'s sort of the preeminent rate-deciding body of the world? I mean, at a certain point, they're going to cut rates. It's about the path that they are on. Yes, there's uncertainty about the size of the first, but not necessarily the pathway. Why is it so problematic?
So think of the image of you sitting on a beach and you're building a sand mountain, and you keep on dropping particles of sand, and nothing changes for a while, and then suddenly something changes due to one particle. This is not the first time we tell the rest of the world we're not a responsible guardian of the system. 2008, the financial crisis originated in the US. The phase of protectionism, 2017, originated in the US. The big transitory inflation mischaracterization originated in the US. So we have not been giving confidence to the rest of the world that we are responsible stewards of the system. And what you're seeing happening is little pipes being built around the system. Now, my hope is that the Fed will not be bullied into a 50 basis point cut. It will do 25 basis points. And I say this even though I thought they should have started last July. And the Fed will this time around come up with clear communication that gives us some notion of where they see the economy going and what are the policy implications, and not tell us we're all data dependent.
So you're saying that they could rectify their mistake if they come out and Fed Chair Jay Powell says, we're cutting 25 basis points, so-and-so dissented, so that we should cut by 50 basis points, and we're going to cut twice more by 50 basis points for the remainder of the year. Goodbye.
Give us a little bit more guidance in the data that's going to be published. But give us
I think Kyle gave the long
first
already.
of all, are they a single mandate Fed? The market thinks they're a single mandate Fed. The market thinks it's all about maximum employment.
And Kyle gave
has
this
completely forgotten the second part of the mandate. And the battle over inflation has not been won yet. So first of all, are they a single mandate Fed or are they a dual mandate Fed? Secondly, what does risk mitigation in this environment mean?
Thank you,
Super.
Super.
Be clear about this.
What's going on,
ED?
ED?
Now is basically pushing them.
What's going on, BioMax? Good to see you. Michael, good to see you.
Get out of if they don't regain control
French
of
Toaster, Alexander
So you've
G.
introduced the balance of risk question, so let's follow that lead.
I got a fresh haircut for the FOMC.
Today,
Let's go.
Cutting 50 basis points when we do need it, or rather
TRD
50
Farmer,
basis points when we don't. What is it?
For me, the biggest risk is cutting 50 basis points when we don't need it. That's why
the biggest
I would
risk.
prefer to see them cut by 25 and have a clear path and stop this, you called it ping pong narrative. Stop this ping pong narrative. Regain
I like
control
ping pong
of the
though,
narrative.
What does
Mohammed.
regaining control of the narrative mean? You mentioned a single mandate central bank. It felt like Chairman Powell reinforced that view in his speech in Jackson Hole. Is there any reason to believe he won't go forward with that same theme later on this afternoon?
I don't know. He tends to flip-flop, so I cannot. I don't have a
He
sense
tends
for
to
what he's going to
flip-flop.
put. But he did
He's wearing his
reinforce it.
flip-flops,
That
guys.
phrase, okay, not the time has come.
Guys and gals.
The direction of travel is clear. The phrase that we do not expect or welcome a further weakening of the labor market was a very strong statement.
That was a big change for this committee. And Lisa, I think a lot of people have felt like there is a theory out there. We talked about it earlier on this morning. The theory out there is that this is still a divided committee and the chairman is looking to corner the other people on the FOMC into making a bigger rate cut decision in 20 minutes' time.
Which was the reason why some people speculated there was this informed article or two in a couple of journals to try to get other people on board. Question to me is how vociferous is the argument on the other side with respect to the inflationary risks? The idea that Mohammed was just talking about, how 50 basis points of cutting at a time when you don't need to would be the bigger liability.
Working out how the bond market responds to this is complex. We talked about this a little bit earlier this morning as well, and I'm fascinated to see how this market responds to this rate cut decision in 20 minutes' time. Because, Lisa, at the moment, we've got equities close to all-time highs.
I gave myself
and bond yields very close
a
to
0.5
2024
haircut
lows.
because I knew I wasn't going to be able to
that by cutting more aggressively now,
be able to get a haircut
reigniting the
as
risk
soon
of
as I
inflation
wanted
later
to get a
on.
new one.
Couldn't
So
you argue that a bigger rate cut now would actually cause the long bond to sell off.
You can turn this down
decline.
a little bit.
We'll have this conversation in
It's a
about
bit loud,
5 minutes'
isn't it?
time, and you'll see it in the real world potentially in about 18 minutes. Mohammed's going to be sticking with us through the hour into the news conference.
Double
and out the other
bottom,
side in
push
just a moment,
up.
We'll catch
Ooh,
up with
let's
Kathy
go.
Jones of Charles Schwab alongside Aditya Bave of Bank of America Global Research. Your equity market on the S&P 500 climbing for an 8th consecutive
Are we ready to
session
trade,
from New York
guys?
City this afternoon. Good afternoon.
What is this? This is garbage. You don't need your advertisements.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in.
I'm going to mute this thing. What's going on, everybody? 37 people in here, 13 legs. What's going on? I know, this is a territory for long-term streamers, okay? We know we got Jason Casper, we got Tom Crown, all these long-term streamers, and the only way to try to compete, okay, and it's not a competition, but the only way to try to compete is for a little man like myself. I do have YouTube Premium. Yes, I do. It's on their channel, right? The Bloomberg channel. So they're running commercials right now. The only way to compete is to have a little bit of cojones, is what OC guy says. A little bit of cojones. We're a little otter gang group here, okay? At the end of the day, we crush the trades, we make our money, and that's it, right? So you got to have a bit of cojones to go up, do these live streams, even when you know most of the viewers are going to go to Tom Crown, most of them are going to go to Tino, most of them are going to go, Frankie Candles and all that stuff. And that's great. Those guys have earned those positions. However, in a competitive world, we do not shy away from competition. We show up, we kick ass, we take names, we make trades, and you know what? We'll let the P&L do the talking at the end of the day, okay? We let the P&L do the talking at the end of the day. Because if you guys have been here for the last 2 live streams, Monday, Tuesday, we've given you the fish, and we're helping you fish, okay? And that's what it's all about here. We have an amazing Discord, amazing group of people. Thank you to all the people in here as well. Thank you for the kind words, for the new haircut. We got to look fresh for FOMC day. Trying to bring you guys as much stuff as possible, okay? We got all 3 here. We got Bitcoin, we got the S&P, and we have the dollar. We can change this, make it look a little bit nicer. I don't know what's going on here. Why when I split the hairs here, does it give me this kind of background? We'll go to the template here. We'll go to the Amy template, okay? And then we go to here. And this is why you should always save templates, because sometimes YouTube just wants to mess around with your templates. So now it's all concise and ready to go. So we got the S&P here. We have Bitcoin here, which if you are part of our Discord, we're definitely looking at a long here. So, we're already on the right side of the trade, but we'll see how this works. We got a nice double bottom here. We had the trade signal given in advance from Kyle. Okay, so Kyle here, double bottom, right? And if you are new, come over and hang out. Look at this. Look, you guys are getting so much alpha from Kyle. I wouldn't say necessarily myself. You get utterly fantastic alpha from me. But Kyle is giving you guys the breakdown early on, giving you guys the ideas and all those things as well. I've given you guys the key levels before time, what we're looking for, okay? If you are new and you are trading this, please lower your margin, lower your leverage, maybe wait till the dust settles. That would be my super duper non-financial advice to you, is to make sure that you are using good risk management, okay? So I am definitely going to be looking to trade this, but we want to wait for confirmations. We want to wait for biases. We are expecting a ripsaw in the market, okay? So that is literally where we're at. You know what? I'm looking for the 2.5, okay? I know I said 0.5. The only reason why I think we get a 0.5 is if we get a dovish 0.5. Rip the Band-Aid, dovish 0.5. We get a 0.5. The market crashes. Then Jerome Powell comes in and he says the economy is great. We're just starting things off aggressively.
I looked at
Okay,
semi-log 10-year
so
real yield.
it's going to
And the
be
answer is the
an
vector's in
interesting
place,
one,
the
a
trend's in
doozy. We got
place,
about
and
13
there's
minutes
even some convexity,
until we
some
get our
acceleration
beautiful
to a
news. Okay,
lower real
we're
yield.
over
Is
here.
that the
We're ready.
outcome today
We're prepared. We got
that American, particularly
our
American finance and business,
projections.
resets in
2
a lower
o'clock
real
rate
yield?
decision. Will we get
I doubt
a
that it
5?
happens
Will we
today
get
because we
a
don't
2.5?
have real
How
economic
will
data
Jerome
that's
Powell's
weak
stance
enough to
be
suggest that we
when
really
this
need
occurs?
a
Okay,
much lower
sorry about the flashbang
real
letting
yield,
this
but
thing load.
certainly
We got a
not
lot of
one
things
that's
running right now,
accelerating
so
to the
hopefully
downside.
the
I
stream
do
holds
think
up
real yields will
and
come
we
down from
continue
here.
to be able
There's plenty
to
of room
help
for
you
them to come
guys
down.
see
I
what
doubt
happens
that
with
today's
all
the
this
day
crazy
that we'll see an
information coming out,
acceleration to the
and we're
downside.
prepared.
Kathy,
I
what do you
bet you
think the
that
reaction
this
function is right
website
now
is
in
being
markets in
absolutely
terms
bombarded
of
by
both
people
the
right
short
now,
end
so
and the long
we'll be
end when it comes
patiently
to 25
waiting over
versus
here.
50?
My
25
guess
versus
is the
50.
market is vulnerable at the short end if it's only 25 because we built in a pretty high probability of 50 at this meeting. So the short
Guys,
end
make
would
sure
be
you share this
vulnerable.
out.
If the Fed goes 50 and we don't really have a sense of what their outlook is longer term, or it's unclear, then the long end might be susceptible on renewed growth and inflation fears. But I think that's a play for down the road. I don't think we're there yet. We have fair value in the 10-year
Risk-free long, nice. Let's go Lunar
380.
Beach's crypto.
We have for a long time, so a little bit below that, but not so much that I think that there's a huge market reaction coming from a Fed meeting. It probably will come one way or another from the next set of data.
Kathy, as you know, it's not just about 25 or 50. It's the package. It's a 3-part act.
It's about
We've got
the
a statement,
package.
a decision, forecast, and a news conference. I want to talk about the complete package.
It's all about
here.
the package,
if this
baby.
is a low conviction meeting, how can we expect this Federal Reserve to provide any clarity about the outlook whatsoever?
Breakout
This is
retest,
a market
OC?
price for a return to
Are we going
neutral,
breakout
not just
retest,
25
OC?
or 50
OC's
today,
in the chat,
but a
guys.
one-way trip
One of
towards
the
3
best traders
percentage
I know.
points. And
What's
I
going on,
struggle
bro?
to see
Good to
how
see you, bro.
we get a full understanding of where the Federal Reserve is going when they failed to commit to whether they were going 25 or 50.
Nick is
ahead of
in
this
the
decision.
chat.
Are
What's
we
going
asking
on?
for
We
too
got all the
much
mods
at
in
2
here,
p.m.
man.
Eastern
God
time?
bless you guys.
Yeah,
God bless you
we always
guys.
ask for too much, right? There's some sort of expectation that the Fed
Fixed range
knows
volume
what the
profile
path
tool.
is
Remember we talked
precisely
about this
and
getting
will
above
lay
the
it
point
out
of
for
control right
us.
now.
I mean,
Okay,
I remember
very
the
nice.
years
We could be
before
looking
there
for
were
this
press
push,
conferences or,
come back,
announcements
retest.
or
Okay,
anything.
the long was
So,
here on the
I
break
can
is
harken
structured
back
to the
times when
upside. The
market was
retest, the
surprised by what
continuation
the Fed
as
did or
well.
didn't
Okay,
do.
so a couple
And
of
I don't
trades
think-
already
I think
to
it's
be
sort of
had, but
intellectually honest to simply say,
we got the bullish
here's what we
divergence in here
expect,
as
here's
well.
what we're
Looking for this to
looking for,
continue
here's
to
what we're
push
aiming
and
for.
hopefully
But look,
get
you know,
above
a
this
lot of
high
things
here. If we get
change, a lot
above
of
this
things
high here, we
come
can
up over
definitely be
time.
looking for
They
a
can't
ripsaw
be
back
expected
into this
to
area
provide
and hopefully get
100%
long.
certainty
Okay,
about what's
if we
going to
are going
happen.
to roll
Mohammed,
over,
I look at this
I
and
would
think
be
John's
looking for
dead on.
something
There's
along the
more going
lines
on
of
here than
losing
selling this at
the
25 to
golden
50
pocket
basis
down here.
points.
Okay, golden
To me,
pocket is
the
going to be
ECB
key.
does a dramatically better job of saying, here's our growth guesses. Are we going to see growth guesses today? Or
Do you
they have
guys want to do the
conviction
only
in what
Bitcoin
nominal
chart?
and real
Do you guys
GDP
want to
are
do the
doing?
triple
I
chart?
think you're going to see
Put a
growth
1 for
guesses,
the
you're
only
gonna see
Bitcoin chart,
unemployment
put a
guesses, and
2
you're gonna see
for the
inflation
triple
guesses.
chart. Let me know.
And
We
there
got the
have been
S&P,
guesses
the
because
dollar,
they have been proven
and
consistently wrong.
Bitcoin.
And this is the
Let me know.
problem, is
1 for
that
just
even
Bitcoin.
the forecasting issue has broken down. You know, when I listen to
2
Kathy,
for all 3.
Yes, Kathy, I remember those days as well. But the whole point of modern central banking is to avoid this unnecessary uncertainty because it can break something in the system. So going back to those days is going against a lot of
I'm going to go
central
with
banking
2. It's good to
practice
see
and
everything
theory.
how it reacts, right? We can jump
Yeah,
into
I think
1.
my point is really
Okay, we
they
can
have to
jump
be
into 1
intellectually
whenever.
honest, and I think they have been.
And for the
When
news,
Jay Powell
we'll
is
go for all 3,
unclear,
okay?
the committee is unclear.
Looking for
enough to
a
not wanna
retest.
lay
Now
out
that
a
we've
very
broken this
long-term,
downwards trend line, looking for a retest, okay?
forecast. They'll say this is just a forecast. We're driving down that foggy road.
This is just
We're
a
trying to go
forecast.
slowly so we don't run off the road.
A little
I
bit
think
overextended
that
here on
is
Market Cipher.
providing a certain honest assessment that this is a very unusual
15-minute,
cycle. It's not
and there's your
following
bull
any
div here,
pattern that
beautiful
we're
bull div on the
accustomed
15-minute.
to.
You got
It is
that
a
last
global
little
cycle.
liquidity sweep,
I
which
think
was
they've been pretty
quite
clear.
nice,
We're
okay?
headed lower.
Getting long off of
They
this,
wanna
right?
get
You don't want to get
back
long
to
off of
neutral.
this,
I think they have an
right? That's your
estimate of
first
neutral, which
warning,
the market
right?
is
You wait for your
pricing in.
confirmation, right?
The speed
Wait for your
maybe
confirmation. If
of
you don't
the,
wait for
are
confirmation,
we
you're going to
taking
get
the fast
liquidity
road, or
grabbed
we're
there.
gonna take
So
the slow lane. Maybe that is in question right now. now, but I don't think that the direction or the destination, so far as it's been laid out, is really that unclear.
She's
at
kind of
least
cute,
as far
eh?
as the market is concerned.
What do you think?
So we have priced in a lot, and I think that that's a reflection of the estimates that we've had so far. And
I got a haircut for this thing. No, I really didn't. I was starting to look like a geezer.
You can express uncertainty, and I think that that's okay. Markets can deal with it.
Hey, Kathy, it's good to catch up as always. Kathy Jones there of Charles Schwab. I'm so pleased we've started to talk about the ECB. This is old ground. We've talked about this a few times.
This is old
but TK,
ground. They always get a
can you
British
imagine
person to do
if
it,
the
eh?
Federal Reserve in
This
the
is how
next
Mrs.
90
Otter
minutes or
tricked me
so
when I was
communicates in the way that
downtown
Christine
when
Lagarde
I
has
first
over the
met her.
European Central Bank.
Hello, you're
It says
right.
things
She
like,
goes,
"We're
and
gonna
it's like,
take this
oh,
meeting
British
by
accent,
meeting.
it's over.
We'll offer you no guidance whatsoever about
Isn't
the
it
next
funny
move.
how
We won't commit to
Americans
a thing.
always
You can have
take a
25
British
basis
person to
points
talk
today,
it
and
out?
we'll see you in a couple of months. This market would crater.
You're dead on. And the
this,
smartest
we're
thing I saw
pushing.
today was a single sentence
We're
from a guy
pushing.
named Malarian off some tweet. He had some free time or something, getting ready for Jets Patriots. And Mohammed said, you know what? This isn't about us. He didn't mention the ECB, but he did mention the Bank of England and the Bank of Japan watching. This is a
This is going to roll over,
meeting,
man.
John.
This is going to
Mohammed?
ripsaw down.
It is, and I think what we're going to see this
All right,
week
so we got
is
this, we got this.
dispersion
Let's
within
get
the general
this
theme
organized
of
as
lower
well.
rates.
So
So I
CME group
suspect
here. So we're
not- I know
57.43,
the Fed will cut today, the question
57.43,
is by how
50.
much. I suspect
So we're pretty
the
much
Bank of England will not
60%
cut
for
tomorrow, and I
5.5.
suspect the Bank
Okay.
of Japan will hike.
I think this
on
is
Friday. And
this
just be a
is
reminder
this
that
is
while we talk about a
fluctuating
global
crazily.
cycle,
So
there is
we're
dispersion
not
within this
gonna
global cycle.
really take
Back-to-back
this with
decisions
weight.
into
Okay.
Thursday, the Bank of England on Friday, the BOJ ahead of the Fed, 7 minutes away. Joining us now is Aditya Barbe
7 minutes
of Bank
away.
of America
7
Global
minutes away.
Research. Aditya, let's just start with the base case. What you're looking for from this Federal Reserve, the decisions,
Where
and the
can I
kind of
park
changes to the
this?
forecast
'Cause
you're
it's gonna
looking
have
for
all those
in about
pop-ups.
7 minutes' time.
Good afternoon. Thank you for having me. So we're in the 25 camp.
Okay, a
I
little
think
bit of a
Mohammed made the case
rejection
a lot
here.
more articulately, honestly, than I can, but let me give it a shot and keep it simple. Before the blackout period, after
S&P
the jobs
rolling
report,
over a
the
little
Fed
bit right now.
nodded towards 25. That was our opportunity to tell us we want to go 50. They could have laid that
Very
case
divided.
out. They chose not to. During the blackout period, the data we got were sticky housing inflation, solid retail sales, strong industrial production. So that should make the case. for
Sounds good,
25
everybody?
stronger,
Let me know.
Not weaker. Obviously,
Could have won
we've
if the
gotten some
sound is
nods
good
towards
in the
50.
chat.
Those
Just want to make
are
sure it's all
from
good for you
voices
guys.
Outside the Fed, I think it would be concerning for the Fed from a credibility perspective if they give the impression that those voices are now more powerful than
Okay.
Fed speakers.
Good. So we can all
That
hear
said,
it here.
Aditya, some people argue that the Fed is far above
So
neutral
beautiful
in terms of
flag
their
here.
benchmark
I'm
rate,
concerned
and that if they're
about-
gonna cut and they're trying to get back down to
I'm
neutral,
concerned
given
about
where
this
inflation
liquidity
is,
in here,
the
okay?
longer-
This was
the slower they
created,
go,
chopping
the more
all the way up
restrictive in a
here
way
and then
they
bang,
actually
right?
are.
So we haven't fully
Economically,
retraced.
does that argument
We have an
hold
order
water
block
to
up
you?
here that we can look to target.
It's a reasonable argument,
And then
they could have
some
made that
clear-
case for 50,
clear,
right? So
um,
here's what they could have said. They
liquidity
could have
grabs
said,
down below.
This is very similar to the
Okay.
mid-cycle
Look
adjustments
at the
of
rejection now.
1995 and 2019.
We got
It's just that we're significantly
4
above
minutes.
neutral, as
Check
you said,
VWAP,
Lisa,
please.
and
Yes,
so
of
we need to
course. So
come
VWAP's
down
above us.
in
We just
iterations
rejected off of
50
VWAP,
rather than
okay?
25. If they
VWAP
communicated
coming
that
back down to
clearly,
retest VWAP
they
actually
would
as
have
we speak.
potentially been fine. Right now,
Okay.
the risk is that the market keeps pushing you to do more. So if you do
This
50
is
today,
this would be our
it could
retest.
everything could still work out.
No,
fine,
we'd be
but the risk
potentially
is
looking for the
next
long
time
here.
you get
I'm not
some
looking
weak
for the
data,
long
and
yet.
that's
I
inevitable
want the
when
dust
the
to settle
economy is
before I
slowing down
trade
a
this.
bit,
Then we'll see.
The markets could push
Then we'll
for
see. I'm ready to
75.
trade.
Aditya, the economist
We got it
Brian
all
Moynihan
open. We're ready to
6
go.
months ago
I've lowered the leverage a
lectured
little
Jay
bit,
Powell
okay?
that just possibly
I've lowered the leverage
consumer
just a little
may
bit.
slow down.
Going down to
We're
40x
waiting.
leverage
I'm talking 4.8
across the board,
5%
just
nominal
just
GDP.
because
Is the
you-
consumer
you-
slowing
you-
down?
And when you're entering
The
trades
consumer
here,
has been
friends, make sure
remarkably
you're
resilient.
entering
We
your
had a bit of a
stop
softer
loss
patch at the start of the year, which is probably
as you're
what was being
entering your
referred to.
trades.
But
This
if you
is
look
not a
at the
time to
last
mess
3 or
around
4
with
months,
stop
even to our
losses,
surprise,
okay? You don't want
there's
to
been a
get
rebound.
liquidated
Retail
because it
sales
will
over the last
snap
4
you.
months have just been very,
Okay,
very
so be
solid,
very
right?
cautious
So,
in this
that's been
environment.
very
Please
helpful
be very
because
cautious
usually what
in
you
this
would see
environment,
in a
okay?
labor-driven slowdown
Let's
is
go to
that
all
eventually
three.
the consumer
No
collapses
trade as
under
of
the
yet.
weight of
We're gonna
labor
watch
income
this
loss,
thing
and that's
do
not
its
happened so
thing.
far.
Okay, we got the
Aditya,
dollar looking. The dollar
I
looks
understand the
pumpy,
arithmetic that leads
and
to
this looks
the
dumpy. Okay,
hypothesis
this looks
that we are
dumpy.
very restrictive because we're way
Right now,
above
this
neutral.
looks dumpy. It looks like it wants
I
to
don't know
roll
a
over hard.
single
Like
indicator of
grab all
financial
this liquidity.
conditions That doesn't
Okay,
flash
I'm looking for it to
very
come
good
back and
financial
grab some of this
conditions. So
stuff
can
in
you
here.
reconcile the
We'll
two
see
for
how
us?
low it goes.
Yeah,
You
I
got
think
3
neutral
minutes,
could be
okay?
higher,
3
right?
minutes.
So what do we know about neutral, really, to be honest? I think we can say with some conviction that it's somewhere between 2.5% and 4%. Beyond that, I don't think we can say a lot
All right.
with conviction. So then it's going to come down
We'll
to
get the reading.
We'll learn where neutral is as the
And then
Fed cuts based
we'll
on
get
what
rid
the
of
economy
this,
does.
and then
if
we'll
they
go
are
to the
able
charts,
soft
okay?
land this economy, if they're sitting at 4% rates 3 months, 6 months down the line, depending on how far they cut, then I think the assessment has to be that maybe R star has gone up. So even if the dots for R star don't go up this time around, they might go up in the future. On the flip side, if we do go into a recession, which is not our base case, then you would say, okay, we won't.
Yep, no fear. We have top and bottom of the range. Yep.
Aditya, appreciate your
We've
insights.
isolated
Always. Looking
price,
for
so we're
25
ready.
In 3 minutes' time. Aditya
We're
Bhargava,
isolated.
Bank of America Global
We got the
Research.
big order
I'm
block
pleased
down
we
here.
got
We
to
got a
this
big order
discussion.
block in here.
Equity markets close to
Okay,
all-time
big
highs.
support. Yes,
Bond
you
yields
are
low.
right. Above your golden
Spreads are
pocket,
tight.
you do
Tight,
have
tight,
some
tight for
support
the
in
round
here.
trip through the whole of August. And
You also
think
have
about
a
the
big
demand
order
we're
block
seeing
in
for
here.
debt worldwide, across Europe, here in the United
Okay,
States
so-
as well, both sovereign and corporate. And look at what's happening with mortgage applications in America. Before we've even seen the first interest rate cut, we're already starting to unlock a lot of activity. Big move higher, TK. Big move higher this morning.
Which to me just highlights the reason why people treat the markets as though they're an adolescent looking for more, and you give them a little bit and then they're looking for even more. This idea that if the Fed says, fine, you guys can have your 50 basis points, then they're going to keep going with that, and that's going to create much easier financial conditions.
Quickly, Peter Orszag at Brookings with a terrific 3 essays
All right.
on what the pandemic did to our microeconomics of our system. Are we still in the pandemic?
No, I think we've mostly exited, with the labor market being the last sector to adjust.
We got 2 minutes, my
Do you think we're in
friends.
bubble territory here? What do you think about some of these market moves? The fact we haven't even seen a rate cut yet.
Alex
and we're
don't
already at
trade
these kind
news.
of levels.
Alex trades
I think we've gotten
aftermath
carried away
of
on the
news.
fixed income side, both on
Bonds more than stocks.
Alex stays
I think
out of
bonds more than
news.
stocks.
Why is that, Mohammed?
I think stocks,
Oh,
you
man.
can make stories for secular changes, for real transformational changes. I think in the bond market, you can't make that argument. If you make it, then you should go the other way, because we have fiscal deficits of 6 to 8%. We have high debt levels. The secular argument isn't in your favor in the bond market.
2 issues in the last few weeks. We've talked about them. We had debt out of Italy, record order book. The week before, we had debt out of the UK, record order book. We saw some of the busiest days we've ever seen in the high-grade corporate market.
All right,
in
here we
America.
go.
Tons of demand to back it up.
And when you
Here
ask
we go,
people why,
friends.
they say there's cash out there.
Ladies
People
and
wanna lock in
gentlemen,
yield
boys and
before some of
girls,
those
what are we
rates
gonna
go
get?
down. I love this story.
What are we gonna get?
Idea that basically you can come up with a story for stocks, but the story for bonds doesn't work logically
10,
with where it is
9,
right now. And
8,
that, I think, is the key.
7,
if you're
6,
storytelling,
5,
stocks actually make more sense
4,
right now than the story
3,
that is the bond market.
What did you say this
2,
morning? This is a
1.
market where
We're
logic comes
dumping.
to die.
We're
Isn't that
dumping.
what you said?
Yes,
We're
that is what I
pumping.
said.
That's my line of the month. My line of the month. This is the countdown to the Fed
We're
decision.
pumping,
It is
baby.
literally seconds away. Going into it, your scores look
We're
like this in
pumping.
the equity market.
No
firmer
trade yet.
by about 1/10% on the S&P 500 on an 8-day winning streak. In the bond market, 2 years.
Not giving me a number.
Your scores as follows. Your
Not
2-year
giving me the-
yield in America has been
Not
moving
giving me
lower
the
over
number.
last month. Your yield 3.65. Your Fed decision with Mike McKee.
It's 50.
It's
and the promise
50.
of another 50 basis points in cuts by the end
It's
of the
50.
year, and another 100 basis points in
Nope.
2025, which would put the nation's benchmark rate at 3.4%.
No, it's 2.5.
It's projected to fall another 50 basis points in 2026, which would put the
What
rate
a
at
pump.
2.9%, which is now the Fed's median forecast for the neutral
We're pushing.
rate. That is up 1/10 from June. The consensus is
We're pushing,
GDP
baby.
will rise 2% this year, down 1/10 from the June forecast.
Dixie's
Growth will be
dying.
the same in 25
S&P's
and
flying.
26. Unemployment will hit 4.4% this year. That's an increase from the June
Let's
figure.
go, Bitcoin.
It will fall to
60,000.
4.3% in 2026.
60,700.
PCE inflation of 2.3% this
The
year.
dollar
falls to
is dead.
2.1
We're
next
losing
year
key
and
support
hits
on the
2%
dollar.
target
Woo-wee,
in 2026.
let's go, Bitcoin.
Though inflation remains, quote,
Let's go,
somewhat
baby.
elevated, the statement
Pump
says
it,
they
baby.
cut because they now have greater confidence. Inflation is moving
Pump it,
sustainably
baby.
toward their 2% target, and the risks to
And we're
inflation
lagging.
and the labor market are roughly
And we're
balanced.
lagging.
While they do not explain
broke the
why they
stream.
decided on
It
a
broke
half-point
the
reduction,
stream.
the statement says the committee is strongly committed to supporting maximum employment. And remember, in Jackson
It
Hole,
broke
Chairman
the
Powell
stream.
said any deterioration in the labor market would be unwelcome. There was one dissent from Governor Mickey Bowman. It's the first dissent by a Fed governor since 2005. It is the first dissent by any member of the committee since 2020.